All right, welcome. If you've been tuned in for the past 5 weeks or so, you already know the vibes. This is not financial advice, just going to be sharing my experience, my perspective, the way that I view and do things in these markets. So I always like to start off with the economic calendar pulled up. What I'm going to do right now is go to the filter and apply. So we'll take off the yellow folders, which are like the low impact ones, so that I can just show you the high impact news of this past week for the review, right? So we see on Tuesday, January 31st, we had a red folder, high impact, right? Also, we had an orange one there. Wednesday, we had a couple of red folders in the morning, followed by more red folders in the afternoon, which were the more important ones. The Federal Reserve releasing their interest rate decision. Going into Thursday, there is high impact news. You see these red folders, but that's for GBP and Euro, respectively. Not really looking at those markets right now, so really ignoring that. They have unemployment claims Thursday, and then Friday, NFP in the morning. So now going to the charts. So I always want to start off with the monthly chart perspective. Looking at the Dow Jones, we see we are still trading inside of December's range. Looking real quick over at NASDAQ, right? We were able to trade above December's high this past week, starting off for February, right? And we did get a close above. Then looking at the S&P, traded above December's high, but we closed back within it last week. Now, we're just going to break down Dow, and then I'll just go down the line here. Weekly chart. So we were looking for this level. Well, I hadn't shown it, but after it reached there and it rejected, right, 2 weeks ago in my video, there was something that I was emphasizing, that this was a draw on liquidity, that midpoint of this weekly wick. We tapped that, then we rejected. We had an inside week, and then this past week traded above the high of this week, not reaching back up to that midpoint of that previous week that offered resistance, and then we ended up closing lower. So this was actually ideal from 2 videos ago, what I was looking for in price action for it to close like this. And moving on to the daily chart. So we're seeing now these blue dash lines, right? These are going to be midpoints of daily wicks. So this was a potential draw on liquidity I was looking for this past week. If prices were able to trade higher and sustain. But as you can see on the daily chart, so this was the first day of this past week where we're very sloppy here on the daily chart, right? Very sloppy. A lot of people were able to catch some of these swings, but you had to be quick, right? You wanted to be in and out just because there was nothing that was sustained here. No, there's no follow through with any of these moves. A lot of, short-term reversals in there. But we do see, if you can see, these dotted lines at 0.79, 0.705, and 0.62. So not to forget that Dow Jones in particular has retraced the highest back towards its all-time high. And so we are within what could be considered a premium. And if we do start to trade lower, given whatever catalyst would take for that, I do still have my eyes on, well, first of all, December's low, right? Getting below this consolidation, but then also November's low, which is down here just below 32,000. And looking at the hourly perspective to get a little bit, closer to the price action here, the yellow line denoting the opening price for the week. So we did get the initial price action I was looking for 2 videos ago that I described, where we trade lower first for the week. And then ultimately we get back higher, and then we end up closing back really close to where we opened at. And so on Dow Jones in particular, although we did trade higher, we weren't able to sustain, right? And so we rejected, and we actually ended up closing below the weekly opening price, which means it was a bearish week. And then just to see one more time, a lower time frame, how choppy it was. So there were swings that could have been taken advantage of. But again, with the volatility, all the news, and then especially coming into Thursday and Friday, very messy, very dangerous, and low probability in my personal opinion. But that was Dow Jones for you. Now we'll go to the weekly of NASDAQ. And so here we see how it traded above, right? December's high this past week, closed above. So next drawn liquidity that I'm looking for, and we're going to keep higher prices, is that 13,100 level. Could see a retracement back down to retest this December high, or some other area interest within this week's price action. So let's see. Daily chart. So this was my drawn liquidity for NASDAQ. It was actually just this. So you see the blue lines here. Those are from the low of this candle, the high of this candle, and then just measuring the halfway point of that. So that large imbalance, which was sitting right above December's high, was the drawn liquidity. We traded lower to start the week, down into these two down closed candles, found some support. Right, Tuesday, we did trade lower, but then we ended up closing bullish. Wednesday with FOMC, we got animated, traded above December's high, traded within that range, and then we actually wicked into this volume imbalance here, rejected and closed off of that, right? And then on Thursday, opened up with a gap inside of that volume imbalance, trade through the midpoint of that range, trade above the high of that range, and then we see on Friday, we open up with a gap down back inside that range. Hourly chart, just right, looking at from weekly open, see how we drift lower, trade to that support level, consolidate pretty much after we rally from there. And then once that FOMC news hit the market, got explosive, and that was when we started to trade above all of these points of interest here. And then again, we made the high of the week on Thursday, trade lower, and then essentially on Friday, we had an inside day, meaning that the high and the low of Thursday were not taken out on Friday. So Friday definitely got a little bit choppy with NASDAQ, but still you see there were some opportunity here for traders that know what they're doing, right? And then 15-minute chart. So we see just again, this is looking much cleaner than we saw on Dow Jones for sure. Not as much up and down, back and forth. We actually get the follow through to the upside. And then once we, reached up to the high of the week that we created on Thursday, we drift off of that. And then we do see how it just plays these levels on the 15-minute chart. So now S&P weekly chart. So we see we got the midpoint of this wick, which we reached last week. And then this week we trade below it, but look at the body of the candle, right? Where we opened up above it, ended up trading higher, above December's high. We traded above this old swing high, rejected off of both of those and closed lower. But still, for me, drawing liquidity is still going to be higher. So it could be looking to possibly get into this gap here and possibly even as high as this old high up here. So daily chart, this is actually the one that I was looking more forward to as far as the price action and things of that nature to look for trade setup this past week. So you see on Monday, we did get that initial drop. Tuesday, we dropped lower as well into the blue box. So I wanted to find an entry, and this happened around like 6 o'clock, 7 o'clock in the morning before I start to really look for any setups. So this was a miss for me as far as it wasn't my trade, right? It wasn't at a time of day when I do trade. So there wasn't nothing necessarily missed, but just for the sake of I was planning to get in here, it just didn't happen at a time of day in which was convenient for me, right? And so we did see a nice rally on Tuesday. And then on Wednesday, right, with the FOMC, we dipped back down lower, back into this old volume imbalance. And then we run higher above the target, which I was looking for. 41.17 3/4 was my target for the week anyways. And so we actually traded and closed above that on Wednesday with the FOMC. Thursday here also opened up with a gap. We trade above December's high, trade up to, again, the old high, which I showed you already on the weekly chart. So it was an old weekly high, right? Rejected off of that for the close. And then we opened up with a gap down here inside of December's high. And then we traded lower pretty much just in this range here. Hourly chart, I'm going to see those daily dividers, weekly open. So you see how just basically utilizing the weekly open and that old weekly midpoint of that wick as resistance, trading down into the support level, which I was looking for there to be buying occurring, and I did get that. Retested the 50% of this Fibonacci range from last week, which I spoke about 2 videos ago. Got back above the weekly opening, above that midpoint of that wick, right? Using that as a support base while it consolidates. Dip below it Wednesday, going into FOMC, possibly looking like resistance, right? As we tapping that, looking like resistance, like it may go lower, an initial drop, and then aggressive rally. Basically consolidation here going into Thursday morning, ultimately seeing that run up to that old weekly high and rejection there on the hourly chart a couple times, and then trading lower for the rest of the week. Friday we get a bearish close, and we did also trade below Thursday's low here, so not an inside day on ES, S&P. And then looking at the 15-minute chart, we see I have this new week opening gap marked up, so that's something to always keep in mind. If the week opens up with a gap, to mark that up and extend it out in time. But this just to show from the 15-minute perspective really quick, right? Another thing I want to look at real quick as well is the dollar index. So I was looking for this 101.297 level to be taken out and see how it responded there for weeks now. As you can see, it was just slowly getting its way down there. It took the FOMC on Wednesday for us to finally trade below it here. But then we see we open up with a gap down on Thursday, aggressive rally back above, trading back into the range that it just basically broke out of. So we'll be interested to see how it responds here, and if it wants to get back above the January 2017 high, or maybe find some more resistance and continue lower or move sideways further, right? But now I want to pull up the economic calendar again to go and look at what's on the horizon for next week potentially, as far as high impact news. So we see on Monday, nothing US dollar related. Tuesday, we have Fed chairman speaking at noon Eastern. Wednesday in the morning, we have another Fed member speaking, as well as some medium impacts in the afternoon. Thursday, unemployment claims in the morning. And then Friday, we have also medium and high impact news. So it could be a lot of volatility, given the economic calendar does have plenty of reason for that. So now just to look at it from a daily really quick, kind of get that outlook for next week, which I kind of already mentioned though, right? That looking for continuation higher. So for ES, that 42.23 level, as well as that 42.6550. All obviously pending, though I would love to see the dollar reject at one of these 3 levels here, as well as potential finding of some sort of support, so we can get a reaction like this where we trade lower, but then we get a nice little wick, and then aggressive rally away from that, quote unquote support level. So we'd love to see that as a catalyst to get into some trades to reach for these levels. Same thing though on NASDAQ, bullish, looking for that 13,102 or and a half level to be reached potentially next week, possibly utilizing the midpoint of this range, or maybe dipping down into this volume imbalance here, or even lower, maybe even retesting the low of that daily imbalance or that December high, right? And then probably going to stay away from Dow Jones, to be honest. But we do have kind of like a little trend line here building up that people may be looking to utilize for, right, it to trade higher. Sometimes these trend lines will work out for you. So this could be pretty easy for some people that trade with those concepts. But for me personally, it's not enough for me. So like I said, probably going to stay away from Dow Jones. And so just want to say thanks for tapping in. That's pretty much my review and outlook. And I'll talk to you guys later. Peace.